Yeah, so let's start. If anyone is having any difficulty or challenge before we move to the chart breakdown, I know a lot of people want to see how that mostly the things that I look for in a trade before I execute. But before that, let's move to the questions and answer because when I start ranting, I'm not going to finish now. I like talking. So let's start with the questions and answers before I'll start with the chart breakdown, the things that I look for, and how to apply risk management, the psychology or the mindset you need to have as a trader for you to be able to succeed in this game. But before that, let me take one or two questions before you move on. So if you have any question on anything, any difficulty after the section, you offer signals if I have a live account. If anyone is having a question, please kindly let me know before I move on to the chat. I used to be doing having this section on Zoom, but sorry, on YouTube. I've stopped. Is anyone having a question for me? Hello, can you hear me? Yeah, okay, cool. So, yeah, you
Yeah, we
can.
can hear you, boss.
Yeah, you're welcome, sir. So hello, can you hear me?
Yeah, we can hear you.
Yeah. So someone Kweku has raised up his hand. So Kweku, you can talk.
Yeah, PK.
Yes, sir.
This is Paper Chaser.
Okay, you're welcome.
Thank you.
Okay, okay, okay.
Last time I was analyzing the trade, and then it was weekend. Immediately, the market opened. It goes as planned, but then it was a sell, but then it was a gap sell. So I wanted to ask if it's a gap, will you, if for instance I've taken that trade and then it happened with a gap as planned, will I still have made a profit?
How can you? The forex market opens 5 days within a week and 24 hours within a day. So how can you open a trade? Was it a forex asset or maybe a forex instrument? Was it forex?
Yeah, it
Was
was
it
currency.
currencies?
Yeah, it was currency.
And you
But
open it.
when
You open it on the
uh,
weekend.
no, I analyzed it. I did back testing
Mm-hmm.
on the weekends, and I predicted that when the market opens, it will sell, and it did on Sunday, late Sunday, and in the evening when it the market opened, it went that way, but then it was a gap.
Okay.
So I wanted to know if, in case it was a normal day and then that gap happened, will I still have made a profit?
Oh yeah, sure. Since the price has moved in your direction, you are going to make profit.
Okay, thank you.
Yeah, but
So it
mostly,
means,
yeah,
uh-huh,
yeah. I'm
yes, I'm
listening.
listening.
I'm saying
So
mostly
it
how
means,
gap happens when there's volatility, like maybe when there's kind of those news events. Okay, mostly happens when those news events or maybe when the market is closed and when the market opens because mostly, especially on weekends, see the market is closed. So most of the fundamentals, most of the economic events you are not going to see the impact in the candles are not going to be printing them, so they are all accumulated during the weekends. So it gets released or we see the impact or the effect when the market opens. That's why most often we see, but on normal days we don't usually see. It depends on the broker too that you are trading with. Some of the brokers you see gaps a lot and some of the brokers too, so that's why I always recommend. So if I've joined my training before, I mostly recommend a broker that you are not going to be seeing most of the gaps, because when there's a lot of gaps it becomes very difficult for you to be able to indicate those, especially if you are trading on levels. It becomes very difficult for you to get the exact levels, as in the support and resistance level. It becomes very difficult for you to be able to identify them on the chart. So if you are using a broker like Owanda, mostly Owanda, you don't see gaps like that. Okay, so I mostly wonder why some people even trade stocks, the stock, because when you open the stock market, there are a lot of gaps over there. You see a lot of gaps, but people are trading it and they're making money over there. That's fine. They know how to trade it. If you have done it for long, you know how to go by it. But I always recommend a broker, which is Owanda. You mostly don't see those gaps like that as compared to the other brokers. So mostly when you'll be seeing gaps, okay, so those who are new to Forex or those who are kind of beginners and they don't understand what I'm talking about. When you talk about gaps, when there was gaps mostly or gaps simply refers to when there was error in what formation of price or formation of candles. So instead of how this is how the candles usually formed. Okay, so when it's a bullish candle, you mostly see something like when a candle forms like this. The next candle, when it's a bullish candle, the opening is below and the close is what? Above. So the next candle is supposed to what? Start from where it's closed. So the next candle you are going to be seeing it's what? Opening at this area. Okay, you are supposed to see it opening at this area. So you see, so it follows. So this is the opening, this is the close. And when it's a bearish candle, the opening is above and the close is below. You get it? But the moment you start seeing the errors that you are talking about is when you start seeing maybe instead of the next candle starting to form at this area, so this will be the closing. This will be the close. So instead of the next candle to start at this side, start to open at this side, when you see it over here, that means there was what? An error. There was gap. Okay, this is the gap that you are talking about. Instead of price to start over here, it started over here. So the moment you see something of this sort, it means there was gap. Okay, there was an error in formation or creation of what? Candles. Okay, or candles are the same as price. So when you see something of this place is a gap. So price mostly correct. Okay, price mostly what? Come back and correct this gap, but it is not certain. You don't know exactly. So we have some people that specifically when the market they see gaps in the market, they mostly target and what trade the gaps because they understand that gaps mostly get filled, but it is not certain. Okay, it is not certain. You don't know when. Sometimes it can take a week before it will start filling, or it will take some more than 2 weeks before the gap will come back and fill. Okay, so you don't know when exactly the gap is going to be filled. So you need to understand. So when you see something like this, just wait patiently for price action to align before you start. Maybe make sure price action align. Don't trade because we have some strategies that it's solely or purposely for gaps. That's to them, but I don't know how it goes. But unless for me, I'll be trading the gaps unless maybe price action are set up exactly on how mostly I look for a trade before I'll even try to maybe take advantage. But if gap aligns with my system, that's fine. I'll take advantage of that. Okay. So when price you take a trade and price goes according to your direction and it makes a gap, it's still price. But maybe there was just because of a sudden spike, that's why you are not seeing like as in price perfectly. But mostly when you convert the candle chart to a line chart, you are going to see. Let me see if you are going to be seeing examples. So that's why mostly, if you have joined my training before, I mostly recommend if you are drawing the levels, you have to convert it to what? A line chart. Okay, when you convert it to line chart, you are going to see the skeletal frame of the move. But candles is when you see gaps. But when you convert the type of chart to a line chart, you are not going to be seeing those gaps. Okay, so let's see. Mostly, let's see if you are going to be seeing gaps so that you convert it to line charts and you will see what I'm trying to talk about. So it is only candles. I've not doubled in or other distinct type of chart, but mostly the charts that I mostly place with is the candle chart and the line chart. Those are the type of chart that I mostly as in play over there. But the rest I don't mostly play. Oh, I should have shared the link on my Telegram channel.
Hello, sir.
Yes, sir.
Question, sir.
I'm not done. Please let me finish. So you are going to be seeing the gaps on like candle chart, but line chart you are not going to be seeing it. So I want to, if anyone is seeing a gap, you can tell me so that we check it. You tell me the date too. Then you convert it to a line chart. You notice that there was no gap over there. So yeah, so you can just it's yeah. So you can ask your question as I'm searching. Hello.
I have a question, please.
Yeah, I'm listening.
Okay, I want to confirm I'm a newbie. I've not started
Okay,
anything
please pause
trading.
on. Please hold on. Yeah, so this is an example of gap. You get it? So let me explain it well to you. So you see, this is a bullish candle, and when it comes to bullish candle, this is how the parts. So we see candles are having different body parts as compared. You see, human beings to having different body parts. So candles are having different body part. That makes it a complete candle, either bullish candle or a bearish candle. So, candles mostly the body of a candle mostly comprises of what, the opening, the close, the tip, or the top, and the what, the dip, which is what, the low, okay, or the high. Okay, so mostly if it is a bullish candle, the opening is below and the what, the close is above. And if it is a bearish candle, the opening is above and the close is below. So when you see something of this, which the colors I mostly preach, if I've attended my training before, I mostly talk about. Don't focus on what, the colors, because some traders, if you watch some traders, you will notice that their charts, the colors of the candles are almost the same. So how do they, or how are they able to know this is a bullish candle or this is a bearish candle? So what they mostly use to consider if this is a bullish candle or this is a bearish candle is what, the body, the opening and the close. That is what mostly they use to differentiate, or they use to what, he has to differentiate bullish candle from a bearish candle. So don't mostly pay attention to the colors. The colors is not what defines if this color, if this is a bullish candle or if this is a bearish candle. Because I can turn this one to what, I can turn a bearish candle to what, green, and it's still, for me, it still seems to be what, a bearish candle. What is more important is what, the opening and the close. That's the most important thing. So you need to understand that. Okay, you need to understand that. So let's assume, since this is a bullish candle, this is the opening and this is the close. So if it's a bullish candle, the next candle for me is going to start at where it's closed. So the next opening of the candle is going to start at where it's previously what, closed. So this is where it's closed. Okay, this is where it's closed. So we are expecting the next candle. We are expecting the next candle to start at where? To start the next candle to open over here. We are expecting the next candle to start at where? To start over here. You get me? We are expecting the next candle to start over here. So the moment you see something like this, the moment you see something like this, so you see where it's open. So this place has become a gap. Instead of it starting over here, this is where it started. So this place has become what you call gap. So if you've been hearing of gap, this is what it means. So this is a gap. Okay, this is a gap. So most of the times price will come back and fill this gap. So the filling can be just price coming back again and test. So it can just test and what, just wait and go back. But the moment price come back again, it has what, price is the same as candle. So the moment the candle come back again, and just even if it makes a wick, or it's a price has filled. That's how you assume. So this is how it's gap fill. So price was supposed to, this bullish candle was supposed to, this candle, the next candle was supposed to do something like this. Okay, this is how the next candle was supposed to do. Okay, let's assume it like this. This is how the next candle was supposed to do. Okay, format. But the moment it started over here, there was a gap. You get it? So that's what you need to understand. So let's see what will happen if price will come back again and test that level. So you see, the gap has been filled. Price came and tested this level. Price came back again. You get it? So let's see. Yeah, so since price came over here, we will assume it has been filled. Yeah, so the next person can just.
Okay, my question was, if as a
Hello,
as
sir.
a DB
Yeah, please hold on.
and
Someone
you're
is.
buying
Hello, sir.
and you're buying, do you
Hello,
sell
sir.
immediately?
You
Hello, are
said,
you hearing me?
yeah, someone was trying to interfere. Yeah, I'm listening.
Okay, what I'm asking, when you place a buy, when you buy, do you need to sell it back before you get your money, or you can just buy and make your profit? That's what I want to know.
Your question again.
Let's assume I place a buy
Uh-huh.
and I didn't sell it. Should I sell it back before I make my profit or after
So
the buying?
so in the forex market, you see, when it comes to uh the forex market, it doesn't matter whether we are in recession or the economy is booming. You make money both way. If you are in recession, if there was economic downturn, you make money. If there was a boom, the things are happening, like things are, the economy is in good health, good shape, you are still going to be making money. So no matter what, if you sell, you make money. If you buy, you make money. When we talk about trading, trading simply means what? Exchanging. Like it's kind of buying and selling. Okay,
Yes,
buying and
yes.
selling. That's, let me put it this way, buying and sell. So if you strongly believe a currency is going to appreciate in value, you buy. If you strongly believe a currency is going to depreciate in value, you sell. You get it. So let me use this one. This is going to, trading is not spot betting, because in trading you need to have a strategy before, you need to have plans in place before you make money. You get it. So let me use, it's similar to spot betting. Okay. It's similar to, please, who is that? So trading is similar to sport betting. So let me use sport betting. I think this is sport betting is something that a lot of people relate. So you see, in sports betting, before you be able to what? Before you be able to predict, we have, like with that one, we having different options. So either you predict win, or a team is going to win, or maybe you're having different options. You can either predict maybe goals, you can either predict the throws, you can. But in trading, we're having only two options. You get it? The options over there is to what? Predict if a currency is going to be weakened, or a currency is going to be what? To be strong. That's what we are doing. Okay, when it comes to forex, please note, we have, with the financial markets, we having what? We having different financial markets. We having the cryptocurrency market, we having the stock market, we having the bonds, and they are all assets that you can trade. But I'm kind of into forex and the commodity, which is gold and those oil and those things. That's what I'm talking about. So when it comes to forex, you get it. When it comes to forex, you are predicting if a currency is going to be what? Weak, or if a currency is going to be what? Strong against what? The other currency. Mostly we trade them in pairs. You get it? You trade them in pairs. So it's like traveling to America. If you are in Ghana and you are traveling to America, you need to change your what? Your Ghana cedis to what? And the American dollar. You see two things. You need two currencies involved to be able to what? Complete that transaction. It is the same thing over here. When you are trading digitally, when you are trading, or online, when you are trading, you need two currencies involved. So as you are buying one, what? You need another party who is going to be taking the opposite side of your what? Your transaction. So if I'm taking a buy, okay, if I'm trying, let me use the American example. If I'm going to America, I'm going to what? Need to exchange my what? My dollars for the cedis. So if I'm exchanging my dollars, that means I'm selling what? My cedis, and what? Buying what? The dollars. But before I'll be able to what? Before I'll be able to complete that transaction, I need someone who is also going to what? Sell the dollars to me. As I'm willing to buy the dollars, I need someone will be able to, or will be willing to what? Sell the dollars to me, whilst the person too will be willing to what? Buy my cedis. You get it? So no matter what, you are going to be making money. If you are selling, you are making money. It's all about prediction and speculating. So if you can predict that what? A currency is going to be strong, you are going to be making money. If it goes in your favor, you make money. So the example that I was using as like sport betting, if maybe Chelsea and Manchester United are playing, and you strongly believe that, based on your analysis, based on maybe the strength, the players that Chelsea have bought, maybe based on their past matches and those things, you strongly believe that Chelsea is going to be what? Is having a strong team based on their history. So you strongly believe that Chelsea is going to be winning. When you bet and what? Chelsea win, at the end of the day, you are going to be making money. Or if you strongly believe that Manchester United is going to lose, if they lose, you make money. It's the same thing in trading. So if you strongly believe that maybe Ghana cedis if you strongly believe that Ghana cedis, or the Ghana economy, okay, and the United States economy, if you strongly believe that Ghana economy is going to be in what? Bad or maybe poor state, okay, if you strongly believe, so see, believe, if you strongly believe, that means you don't know. but you believe. So if you strongly believe that what the Ghana economy is going to be in poor shape, what you are going to be doing in what in the future, that means if you believe, that means what in the future something of that sort is going to be what a reality. So if you strongly believe it's going to be in poor shape, what you are going to be doing is what you start selling all your cedis. So I remember when when the economy started being the city started appreciating in value, I was having some dollars. So what I did is what based on what the rumors I'm hearing, based on the things that I'm hearing, the dollars that I'm having, I converted everything to cedis. You get it? I converted everything because I don't the dollar is losing value. I converted everything to CD. So if you strongly believe the CD is going to appreciate in value, what you are going to be doing is what? You start selling. So the moment the CD starts what? Appreciating in value, you get profit. It's just a prediction. You get it? At this point, it is just a prediction. So if it is moving down, you make money. If it is moving up, just what is expected from you is what your prediction should be on point. That is what is expected of you. But from that, you make money both ways. So trading is what a skill that you need to learn. It is a skill that everyone needs to understand and learn because when there was economic downturn, whilst people who are selling physical products are complaining, traders don't complain because they are still making money both ways. You get during the COVID time, I know a lot of people were not trading then, but during the COVID time where people were quarantined, people were not moving out, you were still trading and you were what making money during that time. You get it? So in trading, you don't make money in only one direction. You make money when the market is selling. You make money when the market is what the currency is appreciating or the asset is appreciating or depreciating. You make money both way. I hope I've answered your question.
Yes, yes.
It's
Thank you
also
so
when
much. I'm
you
glad.
buy or sell at the same time. So someone is in. I think his question is either you buy and sell at the same time. Is that your question? So the person is saying, I think your question either to buy and sell at the same time. Hello, the person who just who asked the question.
Yes, yes.
Is your question is it either to buy and sell at the same time?
No, my question is if I buy and do I need to sell it after buying before I'll make the profit? That's my question.
When you buy, the moment you take profit, you have
Ijaboko.
sold.
Okay.
Yeah, when you buy, the moment you take profit, you have sold. If you sell, the moment you take profit, what you've like you've given it out.
Okay.
You've bought.
Thank you.
Yeah, is anyone someone who was asking a question before? Yeah, so your question. Yeah, someone was asking a question before the person asked.
I said, hello, sir.
Yes, sir.
I I have drawn my valid support and resistance, maybe in each 4 hour time frame. Then, the, then it's happened to reverse, and the wick of the candle rather touched that of the support or resistance. How will I be able to enter a trade in such circumstances? How will I be able to analyze that?
You said you've done what you bought.
Let's say, yes, my valid support and resistance, maybe in H4.
Mm-hmm.
Now, maybe I'm waiting for a breakout,
Mm-hmm.
or I'm waiting for a reversal. Maybe there's a breakout, but waiting for a reversal to that zone for me to what? Able to take my trade. Then instead of the candle to touch the either the support or the resistance where the breakout might have taken place, it did not touch it, rather the wick of the candle. So what I'm saying is that if it happened like that, I get confused. I don't know exactly what
So
to do.
you need to have entry rules. You get it? You need to have entry rules. Entry, like what are the things you factor before you take a trade, like your entries. So setup is different from entries, as I've been preaching. Setup is different from entry. So me, okay, for me to enter a trade, what I mostly consider is it depend. I mostly conclude everything from the higher time frame, which is the H4 time frame. So let me look at some of the trades that last week I was watching. So last week I had a losing week. I took one trade, and you see, mostly I don't take a lot of trades, but one trade I took last week was a lot. But I saw some opportunity. I spotted some opportunities that if it is happening this week, I would have taken advantage. But the first trade I saw was what on this one, which is USD CHF, this trade. So those who don't go back to their week and check what happened, that is how it's going. This is what is going to make you a profitable trader. You need to review, you need to go back again and check the actions or the activities that happen in the market. You get it? So this trade I would have taken advantage of. So let's consider the breakout as you are saying. So this is the level you are considering. So this is
Yeah.
the H4 time frame.
Listen, I'm busy in this crowd. Yana skipping.
So stop writing on the screen. If I see such person, I will remove you.
I don't know when I'm going today.
Yeah, so yeah, so this is a breakup example. This is a breakout, sorry, not breakup. This is a breakout example. So with this trade, for instance, you see, if you look left, you will notice that there was a clean zone to your left. Price moved. If you look at the previous candle, you notice that there was no support and resistances to your left. So clean zone that, and another confirmation is what there was a wick over here that price can get filled. Price can fill. So now this is what, if it is a live market that I'm going to take the trade, this is what I will consider. I'll first consider it this. So this is my entry rules. Okay, this is my entry rule. If one is what, either I will take it on the H4 time frame. So with the H4 time frame, if I watch this candle, the candle has broken and closed below this one. So when you learn, if I've joined my training before, I talk about candle structure. So where candle, like when it breaks the high, you see market structure, you're having higher highs and higher lows. So when it's a candle structure, when it is a bullish candle structure is in a bullish trend, what happens is what, for you to be able to know that it is trending up, one thing you are going to see is what, one thing you are going to be seeing is what, the next candle, for you to know that it is trending up, for the next candle is going to what, continue trending up, is what, it needs to break the previous what, tip of the candle, the previous bullish tip, for you to know that the candle is going to continue what, moving up. And if it is a bearish trend or bearish candle trend, one thing you are going to be noticing is what, it's going to break the previous what, candle dip, to know that it's going to continue moving down. So what I'm going to be doing is what, If it breaks the high of this one, and I notice that price is not far from what the area of interest, I'll be comfortable and calculating my risks. Okay, you understand? You've learned candle structure. You notice that if the next candle breaks this one, it means that candle structure prices or the candle is going to continue moving down. You get it? You have learned that candle structure. This is what it tells you. So before you take a trade over here, anytime you take a trade, ask yourself, is price close to what the area of interest? Because you are going to place your stop loss what below or above the area of interest. You get it? If you are taking a trade, you are going to place your stop loss below, okay, below or what above what area of what interest. You get it? So this is the area of interest, the zone or the resist. At this point, price is below, so this point becomes a resistance. Since candle is what is below this one, you have to ask yourself if price, because anytime, so a lot of people don't think about this thing, especially for beginners. They mostly don't consider risk. Trading is a game of probability. So anytime you are inputting a trade or executing a trade, consider your risks. How much am I going to lose in case maybe things go south, in case things doesn't go on well as predicted or planned? Risk should be the first priority. That is why a lot of beginners, what separates beginners from losing traders from what professional traders is, so professional traders understand risks, so they always what consider their risks before what taking a trade. A beginner thinks, oh yeah, any trade you have to be winning every trade. If the moment he get two losses, that means he's not having a profitable system. You can be losing like three times in a row, and one trade is going to just move you from what move you to profitability. So always consider losing is what, and losing forms integral part of trading. If you are not willing, if you are someone who doesn't kind of like embrace losses trading, you can't be a trader, you can't be a profitable trader. If you let losses get to you, you can't be a trader. So anytime you are inputting a trade, always consider your risks. How much are you willing to lose? So if I'm looking at this trade, I have to ask myself, in case maybe Trump, especially GBP card, that trade I took, it was Trump who did it, because I was in profit like $300 before the trade started moving against me. Okay, Trump, it was New York session. That's why I mostly don't love the New York session, because it's kind of very volatile. London session is very calm session. But when it comes to New York, Trump is going to say something and it's just going to trigger the market and things are going to move like opposite. Because the trade that I took on GBP card, I will explain it to you. It was perfectly, price was moving perfectly, and during when the New York Stock Exchange opened, everything started moving scattered. You get it? But it's okay, it's part of the game. I understand, because I followed my plan to the T, and what things just south.
Yes,
You get it? So
Oh.
anytime I am executing a trade, this is what I'm going to consider. I have to consider my risks. If price decide to move coming back, how much am I willing to lose? But the moment, my meeting everyone. But the moment I will notice that what price is far from what my area of interest, if I'm taking it over here, I need to consider my risks. So this one is like 7 pips. Looking at my target is going to be like 29 pips. Okay. Okay, if I'm risking like 7 pips and getting 29 pips, I think it's more than 1 to 2. So if I'm taking it over here and price decided to be moving up, that's cool. But you need to consider, is it far from the area of interest? Are you going to be in deep drawdown? If this is what I'm trying to talk about, if price decides to come back, are you going to be in deep drawdown before you start what price starts moving in your favor? Before like you, is it going to take you long before you be in profit? You get it? It's going to take you long before you be in profit. You need to consider that. But price is over here. If price moving down, I notice that I'll be in like it's going to take me a long time before I'll be in what profit. So what I will do, I'm not going to take the trade over here. The best I will do is what I'm going to move to the lower time frame and look for what market structure, because looking at this week, I've told you, those who have joined my training before, I mostly talk. I explain wake rejection. This is exhaustion, what you call exhaustion. Exhaustion means what? Loss of control. By at this point, this is what lower what do you call it? This is lower exhaustion. Is it lower what? I've forgotten. This is what lower exhaustion. It means that what sellers are losing control, okay? Because sellers were moving price down, buyers came in and drove price up. So at this point, sellers are losing control. So sellers exhaustion, okay? Sellers exhaustion move over the or exhaustion candle. So what you are going to be seeing is what if you move to the lower time frame, this is going to be a bullish candles. Okay, this exhaustion, because at this point buyers are in control. Buyers are in control of the market. So this one shows or tells you that what buyers are what in control of the market now. So if you move to the lower time frame, you see bullish candles. Okay, so for me to take a trade, I need to see what the bullish candle flipping what bearish before I'll take a trade. So this is what will trigger me. I'm not going to take the trade at H4, but I'll move to the lower time frame, which is what the 30 minutes. Mostly I don't go to the 50-minute time frame. You need to know the time frame that are mostly what not time frames that are kind of uh are like reliable. Okay, they don't give a lot of fake out. I see from experience, I see the 50 minutes to be giving more fake out, so I don't like taking those that's why you see my favorite time frames. You see monthly, weekly, daily, H4. These are the time frames that I mostly use it to do my top down analysis. So you see at this point now the candle has flipped bearish over here. So it tells me the sell that I'm looking for, it's kind of ready now. So I understand candle structure. So this is how I'm going to be taking the trade over here. So the moment the next candle break this one, I understand that candle structure is what's moving down. Okay, price is like willing, sellers are fully in control, willing to what move price down. So the moment it breaks the low over here, this is where I'll start taking the trade. Okay, so I'll place my sell stop over here. My stop loss needs to be below the zone. Okay, I'm not going to rely on the lower time frame zone. I'm going to rely on my higher time frame zone, which is what the H4 daily, weekly, monthly zone. So this is where I'm going to take the trade. The moment price comes break this one, okay, I'll be in the trade, but I have to first of all like check whether I'm safe. Don't just be taking trade without knowing where you are going to play your safer side. You are going to be placing the trade, and don't be following those who are teaching you. Always use 10 pips. Use this stop loss varies based on the market condition. You get it. So based on the market action or price action being presented to me, this is the logical stop loss area. Okay, based on the higher time frame. If price breaks this one, then I will understand. So I would love to place my stop loss below a stronger area of interest, which is the higher time frame. You get it. So I would love to place my stop loss maybe let me check the H1 time frame. Let me check the candles. Okay, so maybe I'll place it below. If it breaks, I understand candle structure. So I know that if price break the previous candle low, okay, I understand that's what candle structure is about to shift. And you can use this same thing to what manage risks. So last week I risked 2% on that trade, and I ended up what losing less than what the 2%. I lost like 1 point because I understand candle structure. So sometimes managing the trade, you don't have to wait for price to get your stop loss exactly. You understand candle structure, you understand market structure. When price starts breaking the internal candles, you can just be what closing some of your positions. You get it. So this is going to be my target. You get it. So the entry was taken at the lower time frame. Remember, we wanted to be taking it at the H4 time frame. This is the H4 time frame low, okay, or dip. But now you've gotten a entry, which is what our price is going to be lower than what we are going to be getting good entry as compared to taking it at the lower time frame, because lower time frame is giving us this one. So price has broken out, pulled back. Now what's giving us a bearish confirmation. So the moment price breaks this low, this is where I'm going to be taking the trade. You get it? This is where I'm going to be taking the trade. So it hasn't broken it yet. So it got triggered. You get it? The candle got broken. So I went in drawdown and price started retracing. You get it? So this will be my target. So I'll be patiently waiting for price to what get to my target before. Let me see. I think the target was at the H4 time frame rather. There was some zone at the daily time frame. Yeah. So you see there was a zone over here. That's why price got here. So this will be my target. So you see price got to the level exactly, before starting to what move down. So this will be my take profit. So one to close to 1 to 3. So the moment price touch here, I'm going to what move from the trade. So you need to understand your entry criteria, the things that you look for before you what enter the trade. Okay, not so with entry. Some people when price touch the level, they are inside. So we having different ways you can enter, but this is my entry approach. Okay, all the trades that I've taken, this is how I approach it. If the lower, sometimes the higher time frame can give you straight confirmation, okay, without even you going to the lower time frame. You get it? Without you even going to the lower time frame. So the same breakouts happened on BTC, but that time I was kind of not available at the chart at that moment. This saw that happened on BTC. It was the same approach, but I think, yeah. So there was a breakout over here. I think Paper Chaser took the trade. So there was a breakout over here. So you see, the candle has broken below this one. You see, the candle has broken. But you see, there was what? Select exhaustion over here. There was seller's exhaustion over here. So you can't take, if you are taking this trade, placing your stop loss over here, it's not going to worth it. It's not going to be something that is going to give you good returns at the end. You get it? So this is where you are going to move to the lower time frame and look for market structure, a candle closing in your favor. So you see, I can't take a sell over here because one mistake you are going to be doing is what? Taking a position, maybe either buy and the candle is what? Your candles are like looking like your candles are sells. You are seeing bearish candle. You are not seeing any. You need to wait for price to give you a show you give you an evidence that, oh, now sellers are coming into the market. You see, markets, you having different ways people see the market, but this is how I see the market, and it is working for me. You get it? Some people, when price touch the level, boom, they set their limit orders, and that is fine to them if it is working. I don't condemn strategies, I don't condemn system. I'm matured. I've traded this thing for long. I understand that every system works. The only problem is mostly the traders. Okay, every system works. I'm not condemning systems. I'm not condemning strategy. This is what I do. Okay, this is what I do. So mostly I don't take the trade when it touches like this one. I'm not going to take it. Bullish candle, I'm not going to be taking it. I'll wait for a candle to close in my favor, showing me that now sellers are in control. So this is what I will do. This will be my target, right? So this is what I will do. I will have to wait for candle to close in my favor. Wow. So at this point, okay, this is how I would have taken the trade. If price break over here, understand that what? There was a shift in trend over here. Okay, there was a shift in trend over here. But most often, if I want to be conservative, I will love the candle to close. You get it? I'll wait for candle to close before I'll take the trade. But this is going to be an aggressive way and impulsive because the moment candle broke the tip of this one, which aligns with the H4 time frame too, you see. So this is where I would have taken the trade. I will place my stop loss below the zone. So I'm talking enough. Okay. So you need to have entry rules. What are your entry rules? Not all about price tapping. Understand candle, like candle formations. Understand candle formation. If it is an exhaustion, if it is a breakout, okay, let me give you the clue. The clue, is it clue? Let me. So if it is a breakout, first what I do is what I move to the higher time frame. I seek my confirmation from the higher time frame. So if H4 has broken this one, okay, I don't look for break from the 30 minutes there, but you can be trying it over there and see if it is going to work. But for me, this is what I do. If I see a break at the lower time frame, which is the H4 time frame, okay, before, and I noticed that there was an exhaustion, maybe bias exhaustion, buyers have lost control. So this exhaustion, this top wick over here tells me that what sellers were moving price down, sellers were moving price down. So at this point, what I'll do is what I'll move to the lower time frame and wait for a candle to close in my favor before I'll take the trade. You get me? Before I'll take the trade. So understand the breakout, I'll wait for it at the H4 time. So the USD card trade like this trade, there was a breakout, something of that sort at the H4 time frame. Yeah, so this is an example. Okay. So this is an example. So if you look at your left, you notice that there's a clean zone over here. No support or resistance, no structure over here. So clean zone. Okay, price can easily fill this zone. So for you to take advantage, this is where you're going to. It's two ways. If you are using the H4, where to place your stop loss is going to be. It's not going to be something beneficial, because if your stop loss is over here, this is the logical area. Okay, when you come to the H4 time frame. So if you are placing your stop loss over here, it is not something beneficial. So you need to go to the lower time frame for what? Stop loss sake. Okay, go and look at structure. Go and look for structure at what? The lower time frame. So if price break this one, I have to look for market structure, either H1 time. It depends on the lower time frame we are going to go. So you see the structure that I'm talking about. There was a structure over here. You get it? There's a structure over here. So it's either when price break over, because at this point, since this candle has closed, tap this one, give me this one. I'm going to place my stop loss below what? This level over here. Okay, so let me see if 30 minutes will give me more confirmation. So you see perfect structure over here. Price has what? Broken out, pulled back over here, giving me a candle confirmation. That's what now buyers are kind of ready to move price up. You get it? So you will get a good what? Stop with a good risk to reward. So this is where I'll place my stop. If you want to confirm it from the H4 candle structure, maybe you set it over here and place your stop loss below. Maybe you have to give it a breathing room because of what? Spread and those things. So maybe you can place it over here. Don't make your stop loss tight. Okay, let it breathe, because sometimes weight can take you out. So maybe you can place it over here. Okay, the moment the candle break the tip of this one, this is where I'm going to be taking my trade. Okay, because now there was a bullish candle giving me confirmation. So I'll take my trade. You get it? So this is where I'll be taking my trade. Almost always make sure you are targeting more than, like, because it's very difficult for you to get a winning trade. So if you are messing up with your wins, you are not scratching or taking the best out of your winning trade, the moment you get one or two losses, you are still going to be in drawdown again. So make sure you are getting the best out of your winning trade. Allow your trade to run to your target. Okay, so this one I will get, like, maybe if I place it over here, I'll be getting like 1 to 2. Okay, if I'm taking it on the 30 minutes, which 30 minutes is giving me. So at this point, I can take, because price hasn't gotten to the target yet. You get it? So I can decide if I'm comfortable. I said I've gotten like times two of my risks. Okay, more than 1 times 2 point for something percent of my risks. I risk one, I'm getting in returns 2.42. It's good investment. You get, so I can decide to close the trade and be out of the market if you want price to get to the target, because mostly our target is going to be based on the higher time frame. This is the higher time frame next level. But mostly one thing I've noticed about breakout is what? Mostly price doesn't get to the unlike maybe the higher time frame has pulled back and it mostly runs well, but mostly on the lower time frame, a breakout mostly doesn't run enough and it will just retrace. So I would take profit over here. 1 to 2 is enough, but I was supposed to allow it to get to the target, which is like 1 point something, but I would have taken profit, so that's fine. You get it? Yeah, so you need to know how, like, understand your risks, okay? Understand your entry rules. You get it? Understand your entry rules. Can we go to the lower time frame? So as I've explained, it depends. If you see exhaustion, that means what? If you move to the lower time frame, it's a pullback. You get it? It's a pullback. Yeah, are you okay with that? Have I answered your question?
Yes, sir. Yes, sir. I get it. I get it. I get it.
Yeah,
I'm
so
very clear. I'm much grateful.
yeah. So understand that, and I know with time, if you keep on practicing, you make some mistakes, but with time you get it. Yeah, any question again? Any question again? Is anyone having a question?
Yes, sir. The risk to reward, no. How do you calculate that? Because I wanted to always use the long or the short to calculate, but I don't get it not much.
So if you are buying, you use the long. If you are selling, you use the short.
Yes, but I don't know where the only know how much I'm getting, but the
You don't know what?
like it on the longs or the short where it
I'm still not getting your question.
like let's say I'm going for long, then
Mm-hmm.
maybe reward ratio. I want to know where it is always located on
Your line is breaking.
what I'm saying is sir,
Yeah, I'm listening. Your network is
the measurement
your network is breaking.
either long
You are finding it difficult to hear you. You are
Hello, Pa.
fine. Yes,
Hello,
sir.
sir.
Yeah,
Hello.
so I think the question is trying to ask is, I think I even wanted to ask the same thing. The whole thing that has to do with the risk to reward ratio, the calculation, and then the whole thing. As in, when you take a position, let's say you are going long on the market. You see, when you take your position, you set your stop loss, you set your take profit. You're able to see the pips and all that. You understand? But how are you going to even foresee that? If should I hit my take profit, this is the amount that I'm going to get. Should I hit my stop loss, this is the amount I'm going to lose. Like, so therefore, this is the risk to reward ratio. That dynamics whole thing.
So you need to with your account. So if anytime you are going to factor risks, you need to consider your stop loss. You need to consider the stop loss. You get it? That's what a lot of people. So let's say if I'm taking this trade, so let's say maybe if I'm having $100 account. Okay, I'm having $100 account. I have to ask myself, how much am I willing to risk? Okay, so one thing a lot of people don't put as in factor into consideration is what when they come to the market, they don't set their risk parameter. Okay, so you need to understand your system, the frequency of time, the frequency of trades you take. Okay, so especially someone who focuses on the lower time frames, for you to avoid over rexing, avoid over trading, you need to give yourself number of chances you are going to be giving yourself. If you don't do that, you are always going to blow account. You are always going to be losing profit account. You get it? And you need to set trading is a rule-based game. It's a rule. So me, this is my rules. If I come maybe tomorrow, market is going to be opening tomorrow. Anytime I come to the market, for every day, I ask myself, how many trades am I willing to trade? How many trades? With that one, I can't even determine. So I ask myself, with my account size, how much am I willing to risk for the day? If I take first trade, I lose. If second trade presents itself, I lose. I'm out. Two trades a day, losses continuously. I'm out from the market. Okay. And within a day too, if I take a first win and I am in profit, I don't watch the market again. I'm out from the market. You get it? So with my $100, I'm going to ask myself, how much am I willing to risk or lose on this $100? Risks come first in trading. Risks come first before our profit, because one thing we can we one thing we in trading, one thing we can control is what our risks. You can't control the reward. You can't control where price is going to head to. So what you have control is the risk. So I have to ask myself, how much am I willing to risk on this trade? So let's say maybe $20. You get it? With $20 per trade or per for the day, that is to you. That is what your skill level, your capacity, like your capability. Okay, based on your skill level. So maybe the $20, are you going to divide it multiple times? But within a day, tell yourself, I'm willing to lose maybe $20. So are you going to divide it, or you are going to what? Bet it on only one trade. Okay, so if it is about $20, you are going to be dividing it. That's up to you. Maybe you can divide it by two. You give yourself two chances. If you lose, you are out. You close your trading view, your MetaTrader 5. You just go and what? Continue the other part. You go and continue. If you're having a day job, you go and continue. If you're having a business, you go and just focus on your business. Don't be thinking about trading. Come again the following day. So with $20, let's say you are risking it on one particular trade. So $20 is going to be my risk. Define these things. Okay, this is going to be my risk for the trade. So this is the amount I'm willing to lose. So if I'm setting risk reward, if I'm saying 1 to 2, that means what? My target, if I get a trade and the trade moves in my favor, in returns, I have to get, if I'm saying maybe I'm risking, maybe my risk, okay, risk to reward, that means amount I'm willing to lose. The amount you are willing to lose is going to be your risk. Your reward is going to be what? Your when trade moves in your favor. So my risk is defined by me. I'm willing to lose $20. But with the $20, if I'm going to win a trade, as in if a trade goes in my favor, I need to expect what? A reward times two. Because the only thing that is going to make you profitable in this game is what? Risk to reward. You get it? If you're having low, as in if anytime you win a trade, anytime you win a trade, your wins can't recover your past losses. You are always going to struggle. Sometimes your system might be correct or right, but because you are not confident, you are not patient to wait for trade to the moment. So last trade that I took, I was in $300. Those times I would have closed the trade sharp. But for now, my maturity where I've gotten to, I was very calm, patiently. Price came to draw down. I wasn't bothered. You get it. So if you are not patient to just watch bigger profits coming into your profits coming into drawdown, you can't be a trader. You have to be detached from what? The red, detached from the losses. Okay, it should be normal to you. Okay, if trade is born to be getting to your direction, it will get there. Okay, so your reward should always be greater, so that if you lose one loss, is not going to put you back to losses again. So my reward, I will say $40. Okay, I'm getting times two of what? The trade, my risk. You get it? So my risk is $20. So anytime you are placing a trade, your stop loss, where you are going to be placing your stop loss, doing the calculation, everything, it should sum up to $20. So how are you going to know that? So you define the instruments you are trading. So maybe I'm trading USD card now. So USD card, what is my stop loss? I have to ask myself, what is my stop loss? So if you don't know where to place your stop loss, that is an issue. So define your stop loss. So this is my entry point. This is going to be, if price comes to this level, this is where I'm willing to what? I will accept that I've what? This is where I'm going to accept that the trade, I'm wrong. Let me put it this way. This is where I'm going to accept. So what is your what? What do you call it? Your stop loss pips, which is 12 pips. So anytime you set your stop loss, always factor what? Spread. Because if you set a tight stop, like maybe because I'm saying the zone is over here, so if I place my stop over here and price decide to come back against me, what I'm going to be, sometimes you might just be what? Price can just tap and a spread will take you out from the trade and it will later move in your favor. So always consider spread. Okay, so this 12 pips that I'm saying, I'm going to factor spread. So I will add the maximum, sometimes 2 pips. It depends on the instruments you are trading. If you are trading major pairs, the highest is going to be like 2 pips or 3 pips. If you are trading the minor pairs comes with a lot of what? The spread is very high because of what? The liquidity over there. So maybe I'll place my stop loss over here. That's fine. So I will define the stop. The stop loss, like maybe let me factor pips to this one. So maybe 14 pips. So my stop loss is going to be 14 pips. Okay, this is going to be my stop loss pips. You get it? So this pips is going to help you to know the lot size you are going to be using. So if you can't do the math, okay, if you can't use the math, you can't do the math, you use what? You use the stop loss tool, the risk management tool, okay? So you can go to baby pips position size calculator. They will do the math over. For me, those times I used to do it manually, but for you not to get confused, because your stop loss pips is going to help you to know your loss size. So the account size is going to be $100. So with the $100, the $20 you set as your risk, percentage wise, what's the percentage wise? So if you want to get a percentage, 20 divided by 100 times 100 is going to be like how many? So it's going to be 20 pips. So sorry, 20%. So 20 times 100 is $20. So your risk percentage is like 20 pips, 20% rather. You get it? So 20%. So I'm risking 20%. Your stop loss is 14. So what I'm doing is going to help me to know the loss size I'll be using. So the instrument is USD card. Okay, maybe you put one over here. So you calculate. So you are going to use the standard lots. You are going to use this one, the standard lot. So this is a lot size you can use 0.158. So you can do 0.15. Maybe you run it up to be 6. So 0.16. That's cool. So for you to know this calculation is right, you multiply the lot size, the monitoring value for the lot size times the stop loss. So 0.156, the monitoring value is going to be what? 0.1, the monitoring value is going to be $1. Okay. So the 6 is going to be maybe, so the monitoring value is going to be 1.6. So 12 times 1.6 is going to be 19.2. So approximately, it's not up to, I'm sure, because of the running that we did. So it's approximately like, okay, let's use the same lot size it was given, 0.1.158 times 12. Sorry, it's supposed to be, okay, 12. Yeah, sorry, 1.7 times 20 times 12. Yeah, so 20.4. So the monitoring value for this one is going to be 1.6. Yeah, 1.61. You can do it 1.61. I hope you understand. If we are using loss size 0.1, okay, loss size, you just want to confirm what this app gave it to you is correct, okay, so that you don't go and over leverage your account. So if you want to confirm, convert this loss size to the monitoring value. Okay, so the monitoring value 0.1 loss size. So these are the basic things you need to know. 0.1 loss size, the monitoring value is what? $1. Okay, is $1. And 0.05, the monitoring value is what? 0.5 cents. You get it? So 0.5 cents. So at this point, I said you should run it to this one. So it will be, the lot size you can use is what? 0.16. Okay, which is not advisable to run because sometimes it can give you errors. So 0.16, the monitoring value is going to be what? This is going to be 0.1. The monitoring value is $1. 0.06. The monitoring value is going to be what? 0.6 cents. You get it? So if you add it together, it's going to be what? This is a whole number. So it's going to be 1 plus 0.6, which is going to be what? 1.6. So this is the monitoring value. So the monitoring value, this value you have gotten over here, $1.6 you've gotten, for you to be sure that what the mathematics or the math that this app did is correct, you multiply this one by your loss size, your stop loss. So multiply 12 times 12 by you are going to say by or times based on the school. If you went to the elementary school, you will say times. So 19.2, which is not exactly because of the run numbers that I did. Okay, so it's going to, yeah, let's say $20, approximately $20. So the calculation is correct. Okay, so let's clean up. So you notice that the lot size we can use is what? The lot size we can use, where is it? We can use 0.158. Okay, so this is the lot size we can use. So if you go to your MetaTrader 5, this is the lot size you are going to be inputting over there, 0.1. So if the trade comes back against you, you are not going to be losing more than. So the risk reward that you people were talking about, for you to get 1.2, you need to know your entry price. So this is the entry, you place your stop loss. So this intersection over here is my entry what price level, and this is my stop loss. You get it? So you stretch it. So for you to get times 2 of this one, this risk to reward over here, you are seeing 1.28. That means if I'm risking one, I'm going to get in returns 1.28. You get it? So for me to stretch it to this side, so this one is now saying if I'm risking 1, I'm going to get in returns 2.6. So if I'm risking 20, I'm going to get in return. So you multiply 20 by 2.6, it's going to give you what? 2.62. That means I'm going to get in returns $52.4. So if you want to get 1 to 2, so 1 to 2, here is where is going to be your target. You get it? So that means if I'm risking $20, I'm going to get in returns $40. Is it clear? Is it clear? Is it okay with you people?
Yes, sir.
Okay. You
I have a question.
Raymond, are you okay?
Yeah, pa, I'm very okay. I'm very much okay.
Okay. So someone is saying, how do we set take profit stop loss? Which factors do you consider? I trade gold. Is this tutorial beneficial? You are going to lose money. The question you ask shows that you are losing money. How can you say you trade gold? Is it tutorial beneficial? There's not this system you can apply it to any trading financial market. So there's no system I trade gold trade. Don't be deceived. There was nothing like gold strategy, a system to trade gold. There was not. It is the same thing. This thing you can use it to trade gold. So don't be deceived. Someone will tell you, "I want to teach you how to trade gold." What is the meaning of that? System on how to trade gold. It is the same thing. You get it? This same thing that I'm doing, it is same thing. If I apply it on trading commodities, I'm still going. Maybe the only thing that is going to be different is what maybe I'll go lower, because if it is volatile, you have to lower the time frame, because if we're focusing on the higher time frame, mostly things happen fast. You are going to be missing a lot of trades. So you just have to maybe lower your time frames so that you can just take advantage of what the buy. It is the same price action, market structure. It's the same price forms the same at the lower time frame. So what's the meaning of gold strategy, this strategy? There's nothing like that. Don't be deceived. Yeah, I'm listening.
Hello, pa, another question.
Yeah.
Okay, so I think there's this thing people say about the whole marketing. As in, people trade real life accounts and then people trade the demo. So I wanted to find out. They said like if you are trading demo, will things will sometimes appear as all fleeting and then that easy to trade with. But once you start the live trading, there's this kind of difficulty, or like you see that things really get intense. I just wanted to find out, is the same setup that people trade on the MetaTrader 5 for, let me say, demo account, is it the same thing that those who are trading the live account also see?
Yeah, it's the same thing. It's the same price. But that one, demo is just a simulation. Like you are not going to withdraw. The only difference is you are not going to be withdraw. So you see, let me tell you this thing. When I started out trading, I traded out for, and I'll just like as in bring it to my current trading accounts and those stuffs. Listen, if you are starting out trading, if you are trading by yourself, if you want to understand, I would advise you to trade demo for long. There's no effect that will bring to you when you come to life account. People will say, oh, you are going to be like, when it comes to life, you are going to be emotional. By demo, you are not going to. It depends on where you want to get to in life. When I started out, I traded demo for like more than a year. My focus was the skill, and now you see, when I explain things to you, see, you just sit before your leader. If you're watching me from your PC, you notice that this guy knows what he's talking about, because I took my time. My focus wasn't money, my focus was the process. I traded demo for more than a year. Sometimes I get winning trade, you can't withdraw. That's the disadvantage, you can't withdraw. That's fine. You get it. So when you trade demo for long, you get your hands on the skill. You understand. You are not losing anything. But people don't understand the skill and they just rush into live accounts and they will end up losing money and they will just give up, just be preaching this thing doesn't work. But instead of them to focus on demo, build a skill, make sure, oh, this is what I've noticed about the market. This is what I know that it works, this works, this works. Practice. You are practicing without losing money. Okay, so the moment you see some improvement, you are seeing one particular pattern happening. You get it. Then you transition. You go to, maybe you find your account like $100, $50. You start small. Trading is a journey. It's like life. It's a journey. It is not rush. You are not going to be rich the following day. You get it. So when I transitioned to life accounts, I was I didn't feel anything because I'm already prepared. You get it? I've prepared my mind. I know what I'm looking for. I understand. I know where to place a stop loss. I know how to set stop loss. I know those things without losing anything. You get it? By some of us, we don't know how to even place a trade and we want to make money. Even if you are giving signal, you still will be losing. Okay. The reason why sometimes I don't feel like giving out signals is most of my followers are beginning. If you are giving a signal, sometimes trading is, your senses should be working. If you place a trade, you need to understand how to. So the moment you tell someone to even break even, the person will just be there and they will still be losing. Before you get a trade which will move smoothly to your direction, it's not something that comes easily. Some of the trade you will struggle, you need to break even, you need to manage the trade. Beginners don't understand this thing. So if you are feeding them with signals a lot, mostly it becomes very difficult. They will end up losing their account because they don't understand how to manage the trade. Even if you tell them to break even, they will still be there and the trade will come and hit them, wipe their accounts out. Okay, so you need to learn all these things before you what? Before you start what? Even betting on what? Your life account. So recently I started managing $50,000 account. I was then not managing an account size like that. Ask me what was my emotion. I felt zero emotions. I felt the same as I'm trading $200 account. I felt the same as trading $500 account. I felt the same. Why? I'm having the skill. I'm prepared. You get, by most of you are not prepared. You come straight to live accounts and you lose. Demo, our advice, demo is best. If you don't know, if you have not found your feet, if it is advisable, someone will say this is not, it is not going to help them psychologically or emotionally. They are lying to you. At the moment I funded my account and I bought my prop firm, I passed my prop firm. Imagine, from demo to passing prop firm, getting payout. You get it? Demo to passing prop firm to getting payout. I built myself. I'm having the skill. I know what I'm doing. You get it? But if you don't know what you're doing, that is when. But if you have money to be risking on those things, that is fine. Okay, so take it slow. It is the same thing. It is the same market. Just have have a vision. Tell yourself you want to understand this thing. And when I was trading demo, and one thing too is what, I was very serious with the demo account. If I lose a trade, it pains me when I was trading demo because I understand that it is what, it is taking me back. Okay, it is not taking me to where I want to get to. So I was managing demo as like what, life account. I was very emotional about it. I was very attached about it, taking it very slow. If you understand this thing, it is the same thing as what, life account. But one thing is what, some people trade demo and they just place buy and sell. Sometimes they will even forget to manage the trade and they will go and sleep. That's why sometimes people will say go live. Okay, because people are not disciplined when they are trading demo. But it is individual based. When I was trading demo, I was very disciplined because if I lose a trade, it is just taking me back. I'm not moving to my goals. You get it? I'm not moving to my goal. So take it slow, build yourself gradually, gradually, gradually. With time, money will be secondary. Even if it takes you 15 years and you what you have to hope for, you are what? You are better than someone who is not doing anything. If you are working on something and it is not bringing you money, you are better than someone who is just moving around with no like plan, with no nothing he's working on. At least you know that with time, a time is going to come and you are working on something. A time is going to come. A time is going to come. You are going to what reap the reward. You get it. And let me tell you, in life, and there's nothing you can work on it for my like 20 years and you are not going to see results. You are going to, if you are putting your all, you are going to see results. You get it. So since you are working on a project and now it is not feeding you, you understand that you are better than someone who is not doing anything, who is not working on anything, who is not learning anything. This is a skill you are learning. So even if it takes you 10 years and you are not getting anything from there, keep on going. Okay, learn from those who are achieving, getting results. Learn. With time it will make sense. Forget about people saying life account is this life. Just be know where you want to get to life. Okay, know where you want to get to. Yeah, so that's what I would tell you about it.
Hello, sir.
Yes, sir.
So I wanted to ask that on a $50 account, what leverage can I use to be able to make many entries, to be able to take many entries?
To take many entries. So I
Yes.
just I just said this thing. When did you join the?
Uh,
Have you been here for long?
uh, Not long, not
Yeah,
long.
so with the $50 account, how much are you willing? That is the first question you need to ask yourself anytime you are inputting a trade. How much are you willing to lose or risk on a trade? Anytime you are inputting a trade, you need to know, you ask yourself within a day, how much are you willing to what risk on a day? Don't make someone determine the lot size you can use or the risks you are going to be. You need to assess yourself, your skill level. You get it?
Sir,
Assess yourself.
I wasn't talking about the lot size. Oh. I was talking
By
about
loss,
the leverage.
the leverage.
Yes.
It's all boils down to those things. Leverage, that means if you are asking me the entries you can be taking, right?
You see, assuming maybe I'm using one is to 100 on a $50 account, right?
Listen, listen,
How many?
listen. Leverage, okay. Leverage
Yeah,
means when you want to leverage, that means you want your brokers to borrow you an amount for you to be able to trade. But one thing you need to understand about
exactly.
leverage is if you are losing your own $50. You are losing within the $50, not the leverage you are being given. You understand? You are losing
Yes,
within the $50. So even if you are choosing like 1:1,000, okay, with 1:1,000, let's say maybe 1:1,000, 1,000 multiplied by 50 is going to give you 50,000. So with the 50,000, that means the lot size you can buy and sell. This is your purchasing power, 50,000. So with 50,000, what lot size? You can use standard lots, right? Is it standard lots,
yes.
mini lots? I think you can use standard lot is 100,000 units of currency, so you can use mini lot. So
Many
zero
lots.
point 0.1. So with the 0.1, if you are using 0.1 and you've set your stop loss 14 pips, 0.1, the monitoring value is what? 1. You get $1. Multiply $1 by 14. You are losing $14. So if a trade goes against you, even though your leverage that you chose is giving you the advantage, or it's giving you the opportunity to be able to use 0.1. But if you are losing, you are going to lose $14 from your $50. You are not going to lose the leverage amount. So always, it all boils down to the risks, the amount you are willing to lose. That's why I was bringing it inside. So always decide, okay, leverage, mostly people pay attention to leverage when they want to maybe flip an account. They want to flip an account. Maybe if they want to, it depends on where you want to, what you want to achieve on the account. Do you want to use bigger lot size to be able to double the account very fast? But you need to understand that that's why they always say that trying to double your account very fast is very risky, because if the trade goes against you, you are going to lose the whole of your account. So that's what you need to understand. So leverage, it all boils down to the loss size. So understanding your loss size to use on a trade is very, very important.
So upon that, on the $50 account, right?
Mhm.
If I'm to use 0.01, I'm to use 0.01. On what leverage can I take about maybe 4 to 5 entries?
So the entries, you see, if you see most people like using more entries, entries as in what? The position size or what? I don't get the entry you want to talk about.
Entries as in maybe if it's a buy, I'm taking like maybe 3 or 4, because maybe I'm targeting maybe 400 pips, right? But I want to be taking the pips in 100. So maybe my first entry, I'll take 100 from that buy. Then the second entry, if it hits my TP, I take another 100. If the third one hits my another TP, then I take the another
Okay,
100.
so with that one, it is the same risks you are going to be dividing. You get it? So we see when we did the calculation over here, we said we can be able to use 0.16. You need to determine it is not about the positions you are opening, it's about your risk percentage or your monitoring value. So maybe you are willing to, as we did the calculation, I'm willing to risk 20% per trade, or yeah, 20% per trade. We did the math, I'll be able to use 1.6. So within that 1.6 is what I'm going to divide it to three positions. So if you see someone has opened like maybe 10 positions on one, maybe buy, it is within his risks. I
Okay.
don't I don't know whether you get it. So maybe if I did my calculation, I'll be using 0.156 loss size. This is the loss size I can use. So within this loss size, one thing you need to understand is what? Divide this by what? The position you want to open. Okay, you need to divide it. So maybe 0.05, 0.05, which will sum up to your risks. So it is not fun. It is not like just flex that they just open. It is within their risks. So even if they lose, they come back to lose this same amount, this loss size. You get it? So you need to always define your risks and you divide it by the positions you want to be opening. I don't know whether you still understand. So it should be within your risks. You have to still know your risks. Is it 2% on the $100? Is it 3% on the $100? So that risks or the percentage is going to help you to know the loss size. So after getting the loss size, maybe zero point 0.1. Okay, with the zero point 0.1, how many? Let's say maybe 0.156. If you divide it by 3, it is going to give you, sorry, 0.156 divided by 3. It is going to give you 0.052. So 0.52 times 3. Yeah, 0. So 0. It is going to give you 0.052. So every position you open 0.052. Every position you open 0.052, which will sum up to this one. So it should be within your what? Your risks. Are you okay with it? I think my time is up. Last question, then we call it a night. Last question.
So,
Yes, sir.
evening.
Good evening, sir.
Thanks for the knowledge.
You're welcome.
The problem is with the twin trading. Is it anytime I enter a trade and I see that like let's say I enter a buy trade and I see that it's going up and I intend to enter another one, then it starts falling. So it always goes against me. So I want to know the right way to enter a twin trade.
A swing trade.
Twin trade.
Twin.
Yeah.
What does it mean by twin trade?
Like
Hello, sir.
Multiple positions.
Sir,
uh,
please, we can't hear him well.
Is it multiple positions?
yes.
Like, does the trade goes against you like fully or what?
Fully,
Or
fully.
maybe
Yeah.
it will stop you out and it will go in your favor.
No, the first one will go, like it will run in profit, and then the second one will start going against me. I face that
So
thing a lot.
at the end, the trade, like the two positions all will come to draw down or what?
So eventually I have to end it and run at a loss.
And where will price go at the end? Will it go to your target? Is it going to end up going into your target?
Yes, yes, yes. At the end, it will go to my target.
Yeah, so I'm now a doctor. So the thing is, if it's either you don't know your target, or since you said you know your target, that means maybe you are not confident with your system.
Oh,
You are
okay.
not confident with your system. Maybe the second position too, you just enter it at a random place. You don't enter trade at random place. You have to always enter trade at where it is safe for price. If it is coming, it is going to be very hard for price to come to that level. So if I'm taking a trade, you see, sometimes I'm very sure that
Ah,
I'll come to the market and I will be late to the trade. Price will be in the middle of the range. Maybe price will just be here.
first one thing.
Price will be here, but I'm not going to be entering over here. Why? Because I understand that where to place my stop loss is going to be very difficult. Okay, so I'll just let it go. I've missed the trade because if I take a trade over here, where am I going to place my stop? Is it here? Because if here too, my stop loss is going to be very wide, which means what I'm going to lose more. Okay, my risk reward doesn't make sense. So don't just enter trade at any level. You need to make sure you define your stronger area that you strongly believe that what it's going to be very hard for price to break through. So this trade, I place my stop loss close to this level because I understand that this zone over here is not a random level that I just place. I understand that it's very strong level that it's going to be very hard for price to come back to this level and what go in my direction. You get it? So, one, your problem might be you are not confident. Okay, so with time, you need to steady the moves, keep on steadying, and be confident and hold the trade, even if it is going against you. If it hasn't gotten to your stop loss, be confident, unless maybe there are some signs that, oh, maybe there was a shift in trend and those things within, then maybe you start managing the trade. Other than that, allow the trade. Sometimes pullbacks. So within my training, I mostly talk when you are learning market structure. I teach them about this thing. I mostly teach them that what the market is like, our life in general, mostly our activities, things that happens in our life. Sometimes things might be going on well perfectly, and sometimes things might be rough. But at the end, if you keep on going, you are going to get to your what your destination, which is success. You are going to get to where you want to get to in life. So don't be paying attention to the pullbacks. They are just temporal moves against you. They are just temporal challenges. So temporal pullbacks and those things are part of the market. It will happen. If it hasn't gotten to your target, allow it to just be doing whatever it will be doing. So understand your system. The thing is, you don't understand your system, you don't have a defined system, you don't have a plan. Okay, so you are emotional. That's why you keep on, like, the moment I've been there before, but if you are in the game for long, it will become normal. I also, those times I used to be, because I've not seen price getting to my target more often. So I don't believe in my take profit that I will even set. But with time, as I've been in the game for long, now I just wait price hit my target before I will close the trade. You get it? So it's all about having a system, seeing the system for a very long time, trading it for a very long time, and you are going to be confident. So now you are not confident in your system. Either you have not been in the game for long, or you are not as in focus on one thing. So you don't have a plan. So that's your problem. So you need to have a strategy.
Okay, okay, boss. Thank you very much.
You're
I
welcome.
get
Yeah.
confident.
Yeah.
Yeah.
So you have to be confident.
I've been in it for only 6 months, so I'm still in the learning.
Okay, you are fresh. Just
Yeah, yeah.
fresh. Yeah, so have a system and steady. One thing about the market is what it
Mm.
repeats itself again. The patterns repeat itself again. So if you see something that happens more often, keep studying it, and with time, you understand how it moves. Okay, so every guru you see on the internet is has seen something that has happened. He has seen it like different market cycles. A year has come by, a year has come back. He keep on seeing the same thing. That is why he's very confident and you allow trade to get to the target. So when you grow and you get to some level, you are not going to be emotional again. But it's like now you are doing try and error. You kind of trying things out to see which one is going to work for you. So you have to have a system. Okay, you need to have a system. Yeah, so I think I've answered most of your questions. So you will keep on doing these things every 2 weeks. You keep on doing good training. I understand that the importance of stop loss. Yeah, stop loss is very important. I trade good. Okay, what am I saying that I'm too short? Okay, so I've answered most of your questions. So go and practice, and if you face any challenge when you come live again, you'll bring it on board. So I'll post this one on YouTube. So those who want to watch it again can go to YouTube and watch. So currently we're having training going on. So maybe July 2, you'll be having training. So those who are interested can just prepare for July if you are ready. If you don't have a system, if you don't have a strategy, you come and I'll teach you my system and my strategy. And if you keep on practicing it, you'll be profitable. Okay. So those who are not having strategy, keep on planning towards that. Someone was saying, let me answer this question, then I'll bounce. What is Marubuzu candlestick? So these things are not important. Okay, the names of the candles are not important. You need to understand the psychology. So you can go and read candlestick. That one too, they bring in the names. So the names of the candlestick are not important. What is important is the psychology. Okay. So during the training, I mostly teach you. If you have joined my training before, you need to understand the psychology behind candle formation. You don't have to memorize dodgy pin bar, this. It's not important. Understand why this exhaustion is there, why the body of the candle is there, why this pullback is there. That is the most important thing, not the names of the candles. The names of the candles is not going to help you. Okay, I'll join the next
Please, I
call.
want to know the kind of profile you normally use.
So I use funding pips.
Oh,
And
okay,
the
thank you.
broker I use for my personal account is XM Global. They will give you 50%, 100% bonus anytime you deposit. I use funding pays for funding account. Personal account is XM. Okay, so I'll post it
All
on
right, thank
YouTube.
you.
So if you have not subscribed to the YouTube channel, you can go and watch it over there. Okay. I'll post it on YouTube,
All right.
the recorded version. All right. So see you on Monday. Have a good and profitable trading week as well ahead of us. Okay. So we are in NFP week, and NFP, you need to be very careful. This week is going to be an NFP week. Let's see the economic calendar and see. NFP weeks are tricky weeks. It comes with a lot of losses because of the news events. So you see the news events mostly Wednesdays, Thursday. That's when things starts. Yeah. So news. You have an NFP week, non-farm employment change. Yeah. So NFP week, you need to be very careful. Be patient with your trades because this week mostly comes with a lot of fake out moves and those stuff. So the next class will be July. Okay, next month. So the next class will be July. I'm helping you. You are not going to be getting this thing anywhere. Someone who you are not going to be getting it anywhere. What is it?
Boss, next month will be July. It will be August, will not.
Ah, yeah, August. Oh, yeah, August. Sorry. So July is ongoing. You are having training which is ongoing at the moment. So you can prepare for August. When I start posting this thing, you can join so that you have clarity. A lot of people, if you start trading, you notice that a lot of people don't understand market structure and those stuffs. Yeah, we'll keep the price is going to be the same. Yeah, 9,000. Yeah, please.
Excuse me, I have a question.
Yeah,
My name is Grace from Kenya. So my question was, how much is the topic?
I'm not hearing you.
How much is the training charges in Kenya shilling?
Where are you from?
I am
Kenya.
from Kenya.
Yeah, 9,000. 9,000 Kenyan shilling.
Okay.
Okay. All right. So I hope no one is having a question again. All right. So see you next time. Bye bye.